The program will begin in 10 minutes. Please take your seats. The program will begin in 5 minutes. Please take your seats. The program will begin in 5 minutes. Please take your seats. The program is about to begin. Please take your seats. The program is about to begin. Please take your seats. The program is about to begin.
Hello, everyone, and welcome to Bloomberg Green Seattle. Across the world, the damage inflicted by climate change is only growing more severe, even as Washington, D.C. makes taking action more difficult. The good news is, for most of the past 2 decades, U.S. climate leadership hasn't come from the White House or Congress. It has come from cities like Seattle, from states like Washington, and from partnerships among the grassroots, business, and philanthropy, too. That spirit of collaboration and optimism is what inspired us to launch Bloomberg Green. At Bloomberg, we provide data and analysis that helps our customers recognize not just climate risks, but climate opportunities. And at Bloomberg Philanthropies, we're working to bring even more partners on board to help make the world safer, stronger, and greener, no matter which way the political winds blow. So thanks for all your good work, your partnership, and for joining us this week. Enjoy the summit, and all the best.
Please welcome to the stage Bloomberg's Meg Szabo and Sarah Wells.
Good morning and welcome to Bloomberg Green Seattle. I've got to start by addressing the question that I know you're all thinking. This outfit situation was not intentional, but I'm very grateful to have my twin, Meg, up here with me as we attempt to be the follow-up act to Jane Fonda and last night's amazing program. But I will say we are equally excited about today's.
There is no shortage of things for us to cover, obviously. Everything is very different than it was when we were here in Seattle 1 year ago. The climate headlines of today are very, very different than they were last year and of years past.
And we will hear a lot about that from investors, from executives, from elected officials, how they're grappling with the changes, as well as everything from energy security to extreme weather and very tense geopolitics.
But before we begin, a few quick announcements. The Wi-Fi details can be found on your badges, as well as right behind me on this QR code. We also encourage you to engage with us on social today using the hashtag #BloombergGreen. And please scan the QR code behind me now to view the agenda. You can submit audience questions, and you'll also be able to respond to our polls. I would also like to thank our sponsors, our title sponsor, Amazon, and our official airline, Alaska and Hawaiian Airlines.
Okay, let's get going. Let's dive into our first session, which is on climate tech in the US and beyond. So please welcome to the stage Vinod Khosla, the co-founder of Khosla Ventures, for a conversation with Bloomberg's Akshat Rathi.
Good morning, Vinod. Welcome to this live taping of the Zero podcast. We are in beautiful Seattle at the Bloomberg Green event. It is, and there's going to be a lot of discussion today about climate change, about what needs to be done to tackle it. But we should start with the headline, which is the tax and spending bill that President Trump signed into law. It's going to reduce clean energy spending by one estimate by $500 billion over the next 5 years. And as a result, all estimates show that the U.S. is going to miss its 2030 climate goals. There is much that climate advocates don't like about the bill, but you wrote in a recent op-ed that you are happy that the tax credits that were going to wind, solar, and electric vehicles have been cut. Why?
Because there's better uses for the money, very simply. You know, these subsidies, once they start, perpetuate. And there isn't, energy is a serious business. You can't subsidize all of energy at scale. So when do you stop them? I think by the time they're a few percent, less than 5% of the market they're serving, subsidies in every industry should always start, be high, be declining over time, and by the time they're a few percent of a segment, they should be stopped. And the money should go to better uses.
Right. So, the Trump administration has made it clear it doesn't care very much about climate change. But the U.S. Congress, before the bill passed, did protect some clean energy tax credits. So there are tax credits that remain for nuclear, for geothermal. Do you think those tax credits would be enough to get nuclear? Well, traditional nuclear is already at a high percentage, but we are talking about advanced nuclear, which doesn't really exist today. And geothermal, which again, traditional version is in small amounts, but advanced geothermal doesn't really exist today. Do you think that the tax credits that we do have in the bill will be enough to get nuclear and geothermal to the level you want it to reach?
So each technology is a little bit different. Nuclear's problem isn't that it doesn't have enough subsidies. Nuclear's problem is NIMBYism has held it back. Every nuclear project takes 10 years longer than you think it will because people like Jane Fonda sue the thing. I always joke, environmentalists got more coal plants to be built in this country than anybody else by stopping nuclear in the 70s and 80s. And that is very unfortunate because they're not thoughtful about what's the replacement. So nuclear's problem is NIMBYism.
Right.
Super hot geothermal, there's old geothermal, and I include companies like Fervo and others in old geothermal, essentially below what's called supercritical steam. Steam above a certain temperature, which is around 400 degrees, has way more energy content. So 450 degrees centigrade well will have 5 times the amount of energy that a 250 degrees centigrade well will. And we have to be realistic about it. So the problem isn't geothermal. The problem is the economics of geothermal, so subsidies will help. But what really helps is developing technology to drill to 450 degrees because normal metal drill bits collapse well before that temperature. So it's getting to the right temperature and the right technical breakthroughs. And nobody's doing that today. We have a couple of efforts in our portfolio, hard efforts to go at that. But if you do that, you don't have to worry about climate because geothermal will be cheaper than natural gas, unsubsidized. Subsidies will help, but in fact, it's really not a problem in geothermal. It's just not enough people have worked on the hard problem. They've worked on hand-wavy problems.
And so let's take them one by one, because you've invested in nuclear.
By the way, we didn't talk about fusion, which I'm very bullish on. I think 5 years from now, nobody will be talking about alternatives to fusion as a power source for the planet for the next 50 years.
Well, you were on the podcast last year, and you said in 5 years, from 2024, there will be a nuclear fusion plant. It's 4 years now left.
Yeah, okay.
There will be a nuclear...
Well, no, I think I very precisely said nobody will debate whether fusion will work, which means we will have demonstrated positive energy, and we will have very clear idea of the economics of a fusion plant and scaling of fusion plants. All those are very, very doable. I expect it'll happen much before 2028 or 2029. 5 years from last year would be 2029. I'm pretty sure one of the dozen reasonable efforts will prove out that it is going to be a viable energy source. And there's a dozen efforts, and only one needs to work to solve the planet's energy problem. Only one geothermal technology needs to work. And I'm a big fan of nuclear too. It has these social problems of NIMBYism.
But we're talking here within very tight timelines. So if you go back to the bill, again, estimates show that price of electricity is going to go up as a result of these tax credit cuts, but also because of shortages of equipment, simple stuff like transformers, like cables, things that we've covered here at Bloomberg Green that are becoming a bottleneck to build out the grid for all the electricity demand, especially from AI that's coming. So if electricity prices go up, building power, regardless of where it's coming from, new technologies, old technologies, is hard. do you think that becomes the bottleneck for the AI ambitions that America has? It's not researchers, it's not startups, it's not investors putting money.
Yeah, so I think you're confusing a number of things. The solar subsidies have nothing to do with electricity prices going up, right? Solar subsidies will slow down the deployment of solar, agreed, but it's still cheaper for intermittent power than any other source of energy.
Yes.
So if you're trying to use intermittent power and come up with clever strategies, for example, production of hydrogen can be done with intermittent power. You want the cheapest power, you want solar and wind to produce hydrogen. But you don't want solar and wind to power a home because you want to watch the football game when it's on, not when the wind's blowing or the sun's shining. This is silliness. There's related concepts. Net zero is the worst idea I've ever heard for homes. But environmentalists keep pushing this bad, uneconomic idea as if economics don't matter.
But prices of electricity will go up, not just because of the tax credits, but because of all these bottlenecks that have been created.
So I think the price of electricity will go up because the demand has surprised us, and demand projections for the next 5-10 years have surprised us with the advent of AI. AI is 2 years old. You know, AI didn't have any deployment 2 years ago, or minimal deployment. And suddenly it's going to be the large consumer of power. So the change in demand is what has caused the problem. Now, NIMBYism like grid again is going to be a problem. But data centers don't need the grid. You can put the data center where the power source is. So I do think grid helps, but the demand problem is created by the projected increase in demand from AI data centers, which can be located near power sources.
But the challenge with the AI data centers is that they want power all the time. And so you're going to build solar next to the data center. You're not going to be able to run it all the time. That's why they're relying on gas, which is getting harder to build because gas turbines are difficult. So the question is, do you worry about the fact that America's competitiveness on AI will be held back because of energy issues broadly, not just renewables or not? It's price and the ability to...
I do worry. Talked about data centers a lot. I think the answer to that is scaling capacity. I do think super hot geothermal is a perfect technology for that. 2035 on, it'll all be fusion as the scaling technology and super hot geothermal. Hopefully nuclear too. But again, siting nuclear is very hard. But you can put a data center right next to a nuclear plant without needing a grid because that's the right way to do data. So data center demand is different because it doesn't put as much of a tax on the grid.
If it's not attached to the grid and if it's attached to a power plant on its own.
Yeah.
Now,
or close by.
Yeah. Now you invest in a lot of companies that are American, that are started here, that are startups over here. Those companies are created by people often who've come to this country, like you came to this country, and there have been, over the past 6 months, difficulties. University funding has been cut. This bill cuts a lot of science funding. Do you worry that the level of ideas that you are able to get hold of to be able to invest in these companies is going to reduce, and that again affects America's competitiveness? Yeah,
look, most of you should know I am vehemently against Trump and the current administration and its value system. So, you know, even though I agree with certain things they've done, I mostly disagree with their policies, immigration being one of them. They will shut down the import of talent, which is the key to growth. So if I were to look at, and I had an op-ed in The Economist a week ago, and just this week, Chris Wright, the energy secretary, had another op-ed. He said, all we need is energy. I do think we need energy, but we need, more importantly, talent. And talent they're shutting off with their approach to immigration. Even the people who will legally immigrate don't like a hostile environment to go into, so we will reduce talented immigration of PhDs and people equipped to solve climate and other technology problems into this country, unfortunately.
And what will you do as a result? You're an investor, you invest in companies, you have capital that you want to put towards these ideas. Do you just go outside America?
Well, absolutely. Look, people are anyway going outside America. And so most companies have multiple locations within America and outside America to go seek the talent. When Russia became a pariah with the Ukraine attack, people set up new offices in Turkey to get Russian scientists to move from Moscow to Turkey so they could take advantage of them because the scientists didn't want to work aligned with Putin's regime. So talent will flow to wherever they're welcomed, and they're very much in demand. I mean, some of the salaries in this AI space, $250 million a year, it's $1 million a day. Those numbers aren't unheard of. In fact, they're sort of becoming more common than I'd like to see. But talent drives everything, maybe even more than energy.
And so are you starting to do that? Are you looking at startups in other countries?
Well, we've always looked at startups in all countries.
Yeah. And which countries are
I think the bulk of our effort is in the U.S. Still, and will continue to be. But we look at talent everywhere.
And where do you think are the emerging hubs?
Well, leaving aside China, because I'm very hawkish on China, I think there's some evil regimes on this planet. India's great hub. Canada's great hub. There's a lot of talent in Canada. AI started around Toronto, in that area. So a lot of talent there. But frankly, talent everywhere is being repurposed into this AI domain.
Now, if we stick to climate tech, the level of investment has been going down. Just total investment in climate tech has been going down for quite some years. The latest figures that we have for the first half of this year is $13.2 billion invested in climate tech. That's down about 19%. You invest in a lot more than climate. Has your own spending in climate tech gone down as well?
No, I think it's been pretty consistent. The thing you have to forget is these aggregated numbers are mostly irrelevant to somebody in my part of the climate world, which is breakthrough technologies. So my personal view, unless you have breakthrough technologies, you're not going to get broad deployment. Even if you did regulation in the EU and you shut down all their steel mills, they're going to get steel from somewhere. And that's not going to come from a country that's adapted green steel at twice the price. So most of the efforts on steel are relatively poor efforts. In Sweden, there's a green steel effort. There's a couple of green steel efforts in this area. I think they're generally poor efforts. Why? Because when they're successful, they are not cheaper than regular steel. We have efforts whose only attempt is to get cheaper than regular steel and have low carbon emissions. And it's an and, not or. And that's what's key for broad deployment of any of these technologies. And that doesn't come for free. We have a much higher risk of failing because we are taking much more technical risk. In steel, we're taking way more technical risk than anybody, but I'm pretty certain we have steel solved. Our steel will be cheaper than coal-based steel in this country or in China. If that's the case, there's no reason, whether you care about climate or not, to build anything but the cheapest steel, and we can use the cheapest ores, the low enrichment ores, are what matter because they're cheap and they make your steel cheaper. Same thing in cement. Our cement plants, and we are repurposing cement, are actually cost less per ton for far lower carbon. But the far lower carbon comes for free. And that is my point. Taking more technical risk is not about billions, it's about millions. Taking small amounts of money on projects that most likely will fail, but if they succeed, they change the world, versus things that are incrementally better or better than anything else, but not good enough to compete with fossil.
So I want to come to breakthrough technologies, but there's one point that you make. So in your op-ed, you talk about green steel, green cement, you talk about geothermal and nuclear. But these products require a market that, if it's cheaper than the alternative, you don't need to worry.
It wins.
It'll sell. But you are also entering a space in the Trump administration that is biasing the market for more carbon. So there are tax credits for oil and gas drilling, there are tax credits for metallurgical coal in this bill. Now, venture capitalists, not just you, but others have told me, we don't invest in companies based on government policy. We'd like the companies to, succeed on their own. But when the market is being biased for carbon, how do you compete?
Yeah, no question. The fossil industry is on the in Washington, D.C., and they've received trillions of dollars of subsidies over time. Whether you're talking about a favorable tax policy like MLPs or master limited partnerships or advantage tax treatment, or the billions and billions or hundreds of billions we spend providing security for oil in the Mideast, that's a subsidy because we are providing security to oil lanes. Those are all subsidies in my view, but the current administration won't acknowledge that. So what can you do?
So then let's come to the breakthrough technologies part, because one reason you won't invest in a company is it's not going to be profitable. But another and a more intriguing explanation, this is something you've talked about, but also your fellow Silicon Valley billionaire Peter Thiel has talked about, that regardless of the politics, the pace of truly transformational breakthroughs in science and technology has been slowing down. Do you agree?
I do generally agree. And people are looking for easier. So mostly in business, people look for lowering the probability of failure, even if it lowers the consequences of success. My personal entire life is dedicated to, I don't mind the probability of failure, but I want the consequences of success to be consequential. If I have a cheaper steel, if I have 10 efforts and one of them produces cheaper steel, it makes up for all the other losses. Now, this is the technology that not only is the steel for the world, that's low carbon, but it's also American manufacturing prowess, in exports, and all the good things any traditional business person would recognize. I think we have that in steel done. I think we have that done in cement. I think fusion will get there. Very likely super hot geothermal will get there. These are core technologies. Yeah. And, as much as I'm not a fan of Elon, he's done a good job with EVs. There's no chance any policy would have achieved what he achieved by just betting on EVs.
So if we take, you talked about some environmentalists who have, stopped nuclear plants and as a result have ended up building more coal power plants. You could break up the environmental movement in many parts. There are, different philosophies. One of the philosophies is what is yours, which is you have breakthrough technologies, and because they are cheaper, the market for those technologies wins out. There's another philosophy, which is we already have most of the technologies, not all of them, but most of the technologies that we need. We just need to build them out and build them out quickly. Now, if you are worried about breakthroughs declining or slowing down, would you be betting on, well, let's double down on what exists and deploy that more?
That's a silly notion, and a few people have pushed that idea, and it's a bad idea. In fact, 2 years ago for, 2022, I had an op-ed in The Economist that fundamentally argued that to get to zero carbon emissions by 2050, we'd have to give up the goal for lower emissions by 2030. Because if we're deploying poor technologies more broadly, we have less money to deploy breakthrough technologies and less money to invest in breakthrough technologies. So we can shoot for 2030 goals or 2050, much better for the planet. And of course, we don't know how much time we have on the planet before we get exponential increase in temperatures and climate effects. It's better to develop the right technologies and deploy them broadly than take what we have and try and deploy them. We saw the disaster in the Spain's electric grid not very long ago. That can happen here too. So I do think we need to be very thoughtful and very businesslike. Even if we do it, India's not going to do it. Today, India is one of the fastest growing solar markets, but coal is growing faster. More coal is being deployed than is ever being deployed before. And that same is true, I think, similarly of China. So we can look at the solar numbers, which have been climbing, but it's because total demand for energy is large. And some things work with intermittent power, and it's cheaper to do intermittent power, so we should do that with intermittent power. Other things have to have reliable power.
So Spain and Portugal are spectacular examples of countrywide blackout and make headlines around the world. But there's an OECD ranking of countries that suffer outages and the number of hours that are lost because of blackouts. The US ranks 5 ranks higher than Spain when it comes to just reliability of power. But let's take the last question. Our time is running out. What do you think is the kind of lasting damage that will come from this Trump administration? This is the second term, and if there is a more climate positive president at some point, what can be undone?
Well, I think the biggest damage is the slowdown in the import of talent from all parts of the world. That's immigration, because that reduces our ability to have the kinds of breakthroughs that make the economics possible, that will give us the technologies that can solve climate and economic growth together.
Thank you, Vinod.
Thank you. Thank you, everybody.
Please welcome to the stage Bob Holycross, Vice President, Chief Sustainability, Environment, and Safety Officer of Ford, for a conversation with Bloomberg's Aaron Rutkoff.
Bob, thanks for being here.
It's a pleasure. Thanks for having me, Aaron.
So we're speaking less than 2 weeks after President Donald Trump signed his sweeping tax bill into law. Your job is to decarbonize Ford, and that tax law is going to make things more complicated. Ford has been doing a good job. You published a sustainability report just before the tax bill went into law, and touted Ford as the number 2 ranked electric vehicle automaker in the U.S. So I thought to start with, if you could just help unpack for people who don't follow electric vehicle policy from the federal government as closely as you do, what changes as a result of Trump's tax bill?
Yeah, no, thanks, Aaron. And yeah, you mentioned our sustainability integrated report and all the highlights that we just recently published around our efforts to continue to decarbonize. And look, that is about a holistic view, a long-term view. We've been very transparent in publishing our data for well over 20 years, the first in our industry. And one of the things that we know we have to manage on an ongoing basis is the whole policy environment and what changes may come at any given point in time. And look, we have to work with a variety of stakeholders at any given time, but also recognize that we have a longer-term objective around decarbonization, providing all the types of products and services for our customers that they value. And so, yeah, we're going to, continue to navigate whatever changes are made in U.S. federal policy, work at the state and local levels, and work internationally as well. So, we're excited about where our product portfolio is and the different range of solutions that we have for customers, and we'll continue to work with our policymakers in the U.S. and abroad as well.
So, the kind of headline for the electric vehicle market in the U.S. coming out of the tax bill was the loss of the $7,500 consumer subsidy. So if you purchase a new car from Ford and it's electric, you qualify for a tax rebate from the government. I work with very talented people at Bloomberg, including analysts at Bloomberg NEF, who crunch the numbers, and what they found was that there will now be 14 million fewer EVs sold in the U.S. by the end of the decade, by 2030. And it's a big change from the Biden-era policy that brought that tax credit into being. As a result of this change, now the U.S. is expected to lag not just behind China, which is the biggest EV market in the world, and not just Europe, but will have a slower adoption rate than the global average. So I guess I wanted to know from inside of Ford, as someone who's looking at this big long-term goal to decarbonize and to move the consumers towards EVs in the future, do you agree with that assessment, or do things seem less bleak than those numbers would sound?
Well, I think the key is it's still all about growth, right? And it's going to continue to be about what that rate of growth is going to be. And look, regardless of the crystal balls that any of us may have, or the policies that are set, or where other geopolitical influences come, the customer is going to be at the center of all of this, and the customer is going to dictate the pace of change. And in terms of how the customer behaves and how we can relate that to our efforts to decarbonize, that means we're going to have to be ready to meet them where they are. And that means a portfolio of solutions, so whether it's pure electric or hybrid electric vehicles. And look, we went right at it and to the heart of our portfolio. The brands within our brands themselves, Mustang, F-150, our transit commercial vehicle franchise, not just in the U.S. but globally, to really show customers that they can have both the functionality and capability they've come to love in these vehicles that lead in their segments, and also have an electrified powertrain. So when it comes to affordability and access to charging and all the things that come along with it, we're going to have to compete, not just as within our industry, but on a global scale as well. But also recognize it's going to take key partnerships, it's going to take policy, but ultimately the customer is going to dictate that rate of change.
So the loss of subsidy must complicate matters when you think about affordability for EVs. Is that something that Ford has change in the product mix in the future to bring on more affordable EVs even without a government tax credit?
Well, when we look to our next generation of electrified vehicles, that is exactly where we know we have to go. The early adopters are going to be willing to pay more. They're going to look at the opportunity to get into a new technology, see the benefits. But if we're really going to get into that, I'll call it more significant majority than just that early majority, of course affordability is going to play into that. And so whether it's different policies that can help complement that, we ultimately have to provide the full value equation for the customer. And look, that goes beyond just the propulsion system. It can't just be about the vehicles electrified. It has to be what other services, what other attributes, what other surprise and delights are these vehicles providing to customers. And look, when you look at Ford's leadership in the electrified vehicles we have other services that we're providing with these vehicles, like what we call our Pro Power on Board, where these vehicles are mobile generators. They're being used to help power homes or businesses or remote sites in the case of power outages. But ultimately, a longer-term opportunity to use these energy storage devices to help improve grid resiliency and provide a value for the customer to not just provide a source for power in an outage, but also return power to the grid at time of need.
So let's talk about that, because I'm a nerd for electric vehicle features.
Even though
I don't yet own one, but when the Ford F-150 Lightning came out, for people that don't know what Bob's referring to, is that you can actually plug it into your house or to power tools if you're on a construction site
or a campsite. Absolutely.
And that seemed really cool. And I also, it was very notable that Ford was the earliest to offer something like that. I have solar panels on my house, so in theory I could plug a car if I had one of these, and I started thinking, in a blackout or whatever, this would be really cool. I guess I'm curious, where do you see that technology going in the future, and has that been something, like, does the F-150 consumer care about this feature, or is it something where like you're talking about, you have to meet the consumer where they are? Is it something that consumers are not really ready for yet or looking for?
Well, they're ready for it, but we also have to partner with all the different pieces that come with delivering that type of technology. So it's going to be key partnerships with utilities, public utilities commissions, others, to help break down the barriers. You talked about having a solar installation in your home. I don't know how easy it was to get, that all installed, permitted, up and running. But those are the types of conversations and partnerships that we're pursuing to make something we know will be of value to the customer if we can break down some of the barriers to help implement that. So we have a unique advantage at Ford because we have more than 50% of the commercial vehicle market. We know these types of small businesses are, uptime and power is one of their key, sources of success in their business. So we're learning a lot from them. And we have this advantage in terms of insights into those customers to be able to talk with these other partners, whether it's on the utility side and elsewhere, to really make this technology get to scale. And look, that's how it all ties back to our efforts to decarbonize, because the more we get these technologies to scale, the more we're going to continue to be on that pace to get to where we want to be longer term.
So, I want to go back to the numbers now. Last quarter, overall, Ford's sales were up like more than 14%. But for the two biggest EVs in your portfolio, the Mustang Mach-E and the F-150 electric pickup truck, the Lightning, those were down by 20 and 26%. And, this is before the impact of the loss of the consumer subsidy in the tax bill that we were talking about. Looking at the numbers, it stood out to me that the hybrid cars, which, is sort of like a kind of earlier version of a decarbonized or less carbon intensive auto technology, those were rising. They were up 23%. So I'm curious, is that a pathway forward to meet Ford sustainability goals? Is that sort of where you see the consumer being more located today?
Well, absolutely. Again, I think it's about offering customers a range of solutions. And look, Ford never abandoned hybrids like others in our industry. We're number 3 right now, but in terms of the volumes, and you quoted the figures, they're up significantly. As customers have come to appreciate, again, the utility and other functionality that these vehicles can provide, that's where we're going and where they're going. And so we're going to continue to hybridize across our portfolio. We're going to continue to work on our next generation of pure EVs. And yes, on a global basis, we're going to sell more of those vehicles this year than we sold last year. And we're going to have to continue to make sure that these vehicles have the broader appeal to customers, again, beyond the propulsion system, but also partner with the supply base and other areas to make sure that we can get them to the scale that we need so that ultimately we can continue to grow all the improvements we've made in decarbonizing and that we highlighted in our most recent report this year. And we're really proud. Despite how the market's going to have its ebbs and flows and the pace and trajectory of improvement may vary, it is all about continuous improvement. And we are very well positioned and continue to be, because of our portfolio of products globally, to make an impact with all these different solutions.
So I just want to really stress test something, like if Ford's goal is to be net zero by 2050.
Yes.
And we're seeing a shift that's more hybrid vehicles at the moment, and maybe a slight slowdown at the moment for pure electric. Does that change your ability to reach that goal or to meet any of your near-term goals by the end of the decade, since it's not a fully decarbonized vehicle that seems to be increasing its sales right now?
Well, we have to keep our eyes on the longer-term goals and continuing to decarbonize. What may change is what are the suite of solutions that we have to pursue. So in our industry, for us in particular, we talk about the 3 major pieces of decarbonization, right? It's our vehicles, which is by far the largest part, but it's also our manufacturing operations, and it's our broader Scope 3 emissions around the supply base. And so while a lot of improvement continues on vehicles, we have to continue to look at other solutions in our overall value chain. In manufacturing, it's about reducing the carbon footprint of where our facilities are. And look, as we've highlighted in our report, we've made significant gains, over a 50% reduction in our manufacturing operations over the last several years. We'll continue to make strides on vehicles like we've talked about. And we talked about 25% reduction in our supply chain emissions as well as we partner with suppliers by 2030. So the eyes on the prize is not changing, but we have to continue to explore a whole suite of solutions that get us to where we need to be.
So I'd like to talk about the elephant in the electric vehicle room in China. Your CEO is distinctive among Detroit auto leaders in that he talks a lot about his appreciation for Chinese EVs, and he talks about driving a Chinese EV called the Xiaomi SU7. It's a $30,000 roughly car. It's a kind of electric vehicle that you can't get in the U.S. And he's been very fulsome in his praise of its how much fun it is to drive. He says he doesn't want to lose it. I'm curious what your experience has been with having hands-on experience of Chinese electric vehicle technology and what it's like inside Ford, kind of hearing your boss kind of praise the Chinese alternative products that aren't available here.
Yeah, I mean, it's an interesting discussion. I mean, Jim's going to be looking around the corner. That's one of the key insights he always has is challenging us around what are we missing? What can we learn from? What are the experiences, whether it's China or elsewhere around the globe, other industries? And look, it ties back to this broader conversation we're having about what does it take to compete in a global industry around these new technologies and to be humble around where there have been advances, whether it's on battery technology or these other types of solutions. Again, not just about the propulsion system, but the digital experience in the vehicles. So we're going to continue to push and work not just to be competitive and have our vehicles compete on their own, but also make sure we're engaged with policymakers to make sure we do have the right suite of policies to continue to do more here in the U.S. for manufacturing, technology development, so that we have a long-term sustainable auto industry and we can compete on the global scale that we need to.
Well, I want to talk, because a lot of the policies that have changed were meant to compete with China, but I want to really just ask one more question about your CEO driving a Chinese-made EV. You're a Ford lifer.
Yes.
I imagine that Ford employees are the kind of people who drive the cars that they make. But does it freak out employees to hear the boss talking about driving a Chinese-made car?
Boy, I got to tell you, if our engineers and others are not driving competitive vehicles to learn and understand, then I think we've got some bigger issues. So, in that regard, we have to be humble and learn from as many different places as we can. So, whether it's on electrified propulsion systems, whether it's about other types of technologies. And look, we know that our competitors are going to do the same thing when it comes to the technologies that we're out front on and that we're leading in, and we're going to continue to put our customer at the center of all the way around.
Well, so another part of the policy framework that just was massively altered by Trump's tax bill were the supports for changing the domestic supply chain to be more conducive to cleaner technologies, to electric drivetrains, to be able to make batteries here. Ford was, over the last few years, a very aggressive, developer of these supply chains and making big investments in battery manufacturing technology in the U.S. and also manufacturing capacity for electric vehicles. What do you do with those things now that the policy framework has changed? There's less support. How do you recoup the capital investment that went into those facilities?
Well, I mean, that's something we're going to have to continue to look at on a regular basis. But look, we've been here. I mean, Ford produces more vehicles in this country than any other automaker. We employ more hourly workers to build those vehicles here, and we build more vehicles and export more vehicles to other countries from the U.S. So for us, this is not about something new or reacting to a policy. We've made that commitment to the U.S. We are America's automaker, and we're going to continue to look at what are the suite of technologies that we have to continue to offer customers, take advantage of the opportunities we have to double down on our leadership here in the U.S., and recognize that we're going to have to continue to work with governments at the federal level, the state and local level, and at the end of the day, make sure we're providing those customers with what they need in terms of vehicles and services.
If you're not getting that kind of manufacturing support that was available under the IRA in the Biden era, is it possible to compete with China without access to the Chinese supply chain? I mean, I know a big part of your work is developing, decarbonizing the existing Ford supply chain and working on the future supply chain issues. Can U.S. automakers do it without access to Chinese, the dominant Chinese supply chain for EVs?
Well, I think it's going to have to go beyond EVs. But yes, for EVs in particular, we're going to have to continue to be able to make batteries here, innovate, and bring the technologies to this country that others may have had a head start on, but also recognize it's going to take broader solutions in terms of materials, whether it's aluminum and steel, less carbon-intensive plastics, other things that really get at the heart of what it takes to get all the way towards full decarbonization that goes beyond just the propulsion system in the vehicle.
I'm curious how you got into this role, just to end on a slightly personal note. I mean, you have an engineering degree, and like you said, you were a Ford lifer. You graduated from the Ford graduate program. That was in the 90s. I mean, did you see yourself working on, decarbonization and net zero things way back then?
No, I appreciate the question here. I mean, yes, I am a Ford lifer. I grew up in Detroit. It always felt like, it wasn't a matter of whether you were going to work in the auto industry. It was which company you were going to work for. And I have a lot of family heritage at Ford. My grandfather worked for Ford. My dad spent time there. Like a lot of us at Ford, that's what makes us unique. But to your immediate question, no, I didn't quite imagine when I was a test engineer in the early 90s when I first started, and was very excited about the gains we were making in fuel efficiency and lower emissions on internal combustion engine vehicles, that I would be given this privilege to help lead a discussion on taking Ford into the future. And look, it's been all about having that guiding light, and whether it's our chairman, Bill Ford, and the North Star he's provided for the company, and what our CEO, Jim Farley, has done to really push us to innovate in new and creative ways, put the customer at the center of it. While I've been at Ford for my entire career, in this arena for my entire career, I've felt like every day is a new experience, and I'm so honored and privileged to have had that opportunity.
Well, one last question, and since we're running out of time, I mean, the other big trend that's been noticeable coming out of the Chinese EV or the Chinese car market is the adoption of these extended range vehicles where you have a very small internal combustion engine and it charges your batteries. And some of these Chinese extended range cars now go 700 miles without needing to be plugged in again. Ford has talked about developing that technology. Can you share anything about that, or how you see that playing into the sort of less carbon-intensive portfolio at Ford in the future?
Yeah, I mean, again, I think it becomes part of the suite of technologies we have to give serious consideration. We talk a lot about, zero-emission vehicles, ZEVs, pure battery electric vehicles, but what we really need to be talking about when it comes back to decarbonization and continuing all the progress that we just highlighted in our most recent integrated report is zero emissions miles traveled. And when you look at these extended range vehicles, they are essentially, pure EVs. Yes, they have a generator, a range extender on them, but when you look at the different customer use cases, the duty cycles, as we like to say, there are huge opportunities. So we owe it to ourselves to have these broader conversations with policymakers to make sure that whether it's what we call EREVs, extended range vehicles, yes, even more efficient hybrid electric vehicles, the next generation of electric vehicles, that they all have a role to play so that we can get to the scale that we need to ultimately meet our decarbonization goals.
Well, Bob, thank you very much for the conversation, and thank you for being here.
Thank you for having me. It's been a pleasure.
This is it. We have to come together to make huge leaps forward.
Please welcome to the stage Bloomberg NEF's Ashish Sathya.
Good morning, everyone. It's great to be here today with all of you. You may have already heard statements like AI is a game-changing technology, it's going to change the global economy, it's going to change humanity forever. But before it changes any of that, one thing it is absolutely already making an impact on is US power system. And data centers, which are the key ingredients of actually building AI models, are at the heart of this question. Data centers have been around for a long period of time. They've been built for decades. We've used them in cloud computing to answer your and my social media queries. We have used them in telecom to have voice and data connectivity. Crypto mining companies have used them to produce bitcoins and cryptocurrency. Large enterprise and corporations around the world use it for use cases like customer support applications. We use them in edge computing. For example, when you are in an autonomous car and real-time decisions are being taken on whether to take a left turn or not, right? That's where a data center comes in as well. And they're used in other applications like weather forecasting. But they are the talk of the town today because they are needed to actually train large language models and then use them for AI inference as well when you and I ask a question of a model like ChatGPT. So data centers are starting to come up everywhere. If you look inside a data center, the most critical component is a specialized chip that does the computation. And multiple chips are combined together to form servers. And all these servers are linked together inside a data center to create pods. And when you combine the capacity of all the pods together, it gives you the computational ability of the data center, also called the IT capacity of the data center. The IT capacity consumes roughly 70% of all the electricity of an average data center today. And another 20% of the electricity in the data center is consumed because of cooling technology, because you have to maintain a certain level of temperature on the chips and the servers. The companies that are building these data centers are largely split into two different categories. The first one are specialized builders, owners, and operators of data centers. These firms actually rent out server capacity to their clients. But more importantly, large tech giants, also now known in the market as hyperscalers, are the big builders of data centers of the future. And the reason for that is obviously they want to build their own AI models, and they want you and me to use their AI models in the future. Thankfully, the AI-based data centers tend to be more energy efficient than their traditional peers. The efficiency of a data center is defined by a factor called power usage efficiency or effectiveness. It's essentially a factor or a ratio where you divide the IT capacity of the data center, which is used for computation, divided by the overall power consumption of the data center, which includes ancillary load like cooling. And a theoretical power usage efficiency of 1 is an ideal, but almost impossible to achieve. But a trend that we are seeing is that efficiency of data centers increasing, PUE is declining from roughly 1.4 as an average for data centers in the US today to a forecasted almost 1.1 by 2035. So data centers are getting more efficient. But as data centers get more efficient, and as the cost of doing a computation declines, the tech companies are actually building bigger and bigger and bigger data centers using a larger amount of chips, using a larger amount of power capacity, because they want to solve more complex calculations, right? And therefore, data centers are becoming bigger and bigger. In 2024, of all the data centers commissioned in the US or operational in the US, the total average power capacity was 50 megawatts. But the new data centers that are expected to be built are 10x to 20x bigger. And these require, therefore, a lot more electricity. So you are going to see a scenario in the future, in the near future, in the next decade or so, where power demand growth because of data centers is a bigger factor in electricity system in the US compared to technologies like electric vehicles, which we were just talking about, or even industrial electrification, including producing new fuels like green hydrogen. So data centers are really like the big driver of power demand in the US power system in the next decade. However, one challenge that the industry faces, it takes a while to build up a data center today. It takes roughly 4.5, 5 years to imagine about building a data center, to getting the land, then getting all the regulatory permissions, then actually having your utility accept an interconnection request on the power system. And then once you've done all of that, it still takes you 2.5 years to actually construct and commission the data center. If you are in an AI arms race, this is really a big problem for you because you want the data center yesterday and you would have wanted to release your LLM model today, right? So you don't want to wait for a long period of time. And therefore, companies that are building data centers are trying to get ahead of the problem by creating a huge pipeline of data centers across the US. But when they try and decide where exactly to build the data center, there are a few factors to consider. The first is you can't really build a data center in a place which does not really have new incremental electricity generation capacity, right? So availability of power is a very critical issue. And if you look at where power generation capacity or power plants are being built across the US, there are a few states that stand out. California is one of them. Texas is absolutely the other one. There are parts of the Midwest where you see new power generation capacity being built. And there are states in the East Coast where new power capacity is also coming up. So this is a critical factor to look at. But the next one is cost of electricity. So it's good to have the electricity, but if it's really expensive, that's another problem, right? On average, an industrial load in the US pays almost $80 a megawatt hour for its electricity. States like California tend to be much more expensive. States like Texas tend to be much more cheaper. And then parts of the Midwest and East are kind of somewhere in the between, right? So cost of electricity is a factor. And if you are a large tech company building these data centers, you obviously have to deal with public opinion, you have to deal with regulatory requirements, you have to deal with investor requirements as well. And therefore, you want to site these data centers in places where you can find clean power as well, or green electricity. One problem, though, right now is that the states that produce the most green electricity in the US are not the ones where new power generation capacity is coming up, right? So it's becoming a difficult proposition to have all of these things together. Beyond electricity, data center operators also need to take into account a few other factors. One of the most important one is actually availability of internet exchange points, IXPs. These are places where you can have good connectivity to local audiences, to regional audiences, to national audiences, and probably to international audiences as well, right? Some of the largest IXPs in the US exist in cities like Washington, DC, in Atlanta, in Chicago, in Dallas as well. And therefore, these places and these cities are becoming important hubs of where new data centers can be built. And last but not the least, tax incentives are really important. The new data centers that are being built for AI model training and inference tend to run in hundreds of millions of dollars, if not billions of dollars, for each data center. And because there's a huge drag on your balance sheet to build, any amount of tax incentive or tax breaks will go a long way in helping you take an investment decision. 75% of all the data centers that exist in the US today are actually in states which already have a tax incentive to build a data center. Anyways, I've talked about 5 different factors. You would probably want to combine all of them together to see where the most optimum locations are. When you do so, a few hotspots emerge. Virginia is called the data center alley of the world. It has the highest concentration of data centers for any place on Earth, and it will continue to be called the data center alley of the world for the foreseeable future. But there are new areas emerging, particularly in the Midwest and also states like Ohio, but more importantly, large states like Texas as well, where new power capacity is being built, and you have enough gas infrastructure in those states as well. So this is where new data centers are coming up. But if you kind of plot out where these new data centers are in terms of whether the power that will be used to feed these data centers is cheap or clean, overwhelmingly you are starting to see a trend where new data centers are coming up in locations where power is cheaper, and it may not be as clean as you would want it to be. So that's a push and pull factor that developers have to actually start balancing in the future. Another outcome of this situation is the fact that traditionally data centers used to be in urban areas, but increasingly, slowly and steadily though, data centers are starting to become bigger, and they're starting to get sited in suburban areas and slightly more remote locations. So a huge question I'd leave you with today is, are communities in suburban regions, in remote regions of this country well placed to take the heat of these data centers when they require huge amount of power demand, they require significant amount of water as well, and they require significant amount of land? It's a $1 billion question, if not a $1 trillion question. Thank you so much.
Please welcome to the stage Gretchen Goldman, President of the Union of Concerned Scientists, and Paul Schramm, former Activity Chief of the Climate and Health Program for U.S. Centers for Disease Control and Prevention, for a conversation with Bloomberg's Zara Hergy.
I'm really excited to be here today. We have two great guests who I have been talking with since the first Trump administration. And we're here now to talk about, of course, what's playing out today. I wanted to start with Gretchen and to help lay the scene. You know, I just mentioned the first Trump administration. We had spoken a lot at that time. Maybe you remember this was 4 to 8 years ago. We had it was Earth Day that first time, and the EPA administrator, Scott Pruitt, had taken down a lot of climate stuff from the EPA website. It was a shock. And then we had the Rose Garden announcement, and they announced they were going to pull out of Paris. And everyone was like, we are having crazy attacks on science. And now we have today, and it feels like a different place. So can you help paint the scene of the difference between the first administration and what we're seeing today?
Sure. Well, thanks so much, Zara, and thank you for this. It is really, we're seeing a huge escalation of what's happening now compared to what happened in the first Trump administration. My role at the Union of Concerned Scientists has been to track attacks on science for the past previous decade. I had worked on that. Then I went into government for the past 4 years, and I'm returning now as the president. And we're really seeing quite an escalation, especially when it comes to climate. In the first Trump administration, we tracked more than 200 what we called attacks on science. So times that scientists were silenced, or a report was suppressed, or otherwise science was sidelined in a federal process. But right now, we're seeing already far more of those attacks on science, and we are only 6 months into this. And a point that I would make on this element in particular, and as it relates to climate, is that we're really looking at a full erasure of federal climate activities across the board. We're seeing attacks on the research and development activities that fund our preparedness and understanding of climate science and what we do about it. We're looking at destruction of a lot of the programs and policies that help us reduce greenhouse gas emissions, that help us deal with climate-related disasters after they happen, and to build that climate resilience that we know is needed across the country. So we're really seeing lots of erasure of climate activities. And this is different than the first Trump administration, because when I came in to the White House under the Biden administration, there, of course, had been lessening and reduction of climate-related work under the first Trump administration. But when I got there and got to look across the government and see what can we do on climate from different agencies, from the White House level, the bones were still there. You could still find people and programs and things that were focused on climate and clean energy. They had perhaps been less active or done less in the first Trump administration, but the programs and the policies and the infrastructure in the government were still largely intact. And that's really the difference in what we're seeing now, in that we're seeing destruction of entire programs like the U.S. Global Change Research Program, just elimination of a lot of the climate data and resources that existed across government, like climate.gov, for example, has come down. And importantly, and perhaps most crucially, the people that are there that are now being forced out or encouraged to leave. And that's a lot of that institutional knowledge. It's a lot of what we need at the federal level to do all the critical climate-related work that we know is needed.
That was a perfect pivot to Paul, who is, our guy from inside the government. And, he has been at the CDC's Climate and Health Program since before the first Trump administration. It came on during the Obama administration. And as we've been talking, it's clear that this year, for him and his program has been unlike any other. So, we just heard what it's been like for Gretchen, who's been tracking it from the outside. But let's hear from the inside, what's really been happening for you since January 20th, Inauguration Day.
Yeah, and I'll have to start with a little bit of an update. When we were planning this session, I was the former chief of the Climate Health Program. I'd been fired. Our whole program was gone. We have since been brought back. I'll get into that. It's kind of all over the place. A bunch more people were just fired overnight last night, about 10,000 more people from Health and Human Services. We're still there. But that's just to say, before I go into what a complete disaster it is to work on climate change in the federal government, I have to give the disclaimer that I am here using my own annual leave, and I'm not representing the Centers for Disease Control and Prevention. So got that check mark out of the way. It's been a lot. So it was immediate. The day after Inauguration Day, we were put on a complete hiring freeze, a complete communications freeze. We couldn't even talk to the health departments that we work with. You know, if anybody in this room came to me looking for advice, we weren't allowed to respond to that. So all of our work came to a complete halt. And that's a lot of really important work. What we do is we look at the human health impacts of climate change. And that's something that there's really not a lot of resources for. We were the only federal program that was specifically doing adaptation for human health. So for example, when there's heat waves, like what's happening right now in Seattle, it's going to be 90 degrees, we would help local health departments and state health departments to do things like set up cooling centers or have communication messaging about, you know, check in on your elderly neighbors, stay hydrated. The same for disasters like flooding, wildfires. We really focused on the human health impacts. So that all kind of came to a stop. It was a really bad environment. People from DOGE were in our building. It was kind of implied that AI was looking at who to fire. Our websites were scrubbed. Any mention of climate justice, environmental justice. We had some info on climate change impacts on the health of LGBTQ communities. All of that deleted. There was even a thing called the Social Vulnerability Index, which we had put climate and weather info into, and it helps local decision makers to look at neighborhoods in their city and look at who is most impacted, like where should we be focusing the resources. That was taken down and only put back up by court order. So it was a lot. And then on April Fool's Day, I wish I was kidding, but at 5 a.m., about 2,400 CDC staff received an email that we were going to be fired. We were immediately put on administrative leave. It didn't come from CDC. CDC didn't even know it was coming. There was no communication. There was no rhyme or reason to who was going to be fired. In fact, there's not even a CDC director or an acting CDC director, so we don't know where all that came from. So we were put on admin leave, and court cases have delayed that. And then about a month ago, about 400 of those 2,400 people that had been fired we got another surprise email that we were being brought back. About half of HR was fired, though, so the process of coming back has been really complicated. But so we're there. Some staff has left. As you can imagine, when you get fired, you start looking for other jobs immediately. So our capacity has been cut, and we're still on the hiring freeze. We're still on the spending freeze. If my computer monitor breaks, we can't buy a new one. Like it's just completely stopped. So we're there, and we're happy to be there, and we're doing the best that we can to support health departments and other partners right now. But yeah, it's tough, and we're just waiting to see what happens next because we have funding through October 1st.
Yeah.
And then nobody knows what happens.
Okay, before we get to the next question, I am going to take this time to do a quick poll. So I think you guys have been doing this before. This is interactive, so please participate if you can. I think they're going to toss the question up. But where are the most promising job opportunities for former federal workers? Is it the private sector, state and local governments, nonprofits or NGOs, or academia? So please, if you can, put in what you think, and then Gretchen is going to provide a little bit of live fact-checking for us on what we're actually seeing play out. And this very much ties to what Paul was saying, where we're having people who were laid off, now they're looking for a job. Sometimes they're being asked back and they've already found a job, sometimes they haven't. So it's a really confusing situation out there.
Yeah, it's first I'd say please join me in hiring former federal employees wherever you can, because there's a lot of incredible talent out there that now needs positions. And the point I just would make on this, just having seen it from the inside, so I did the first 2 years of the Biden administration in the White House, and after that, because of the success of the Inflation Reduction Act and the other federal legislation, I got convinced to stay in government because it was just such an opportunity to make progress on climate. So I went to the Department of Transportation as the Climate Change Research and Technology Director there. And I was part of a wave of people that were motivated, that came from the private sector, that came from outside government, that hadn't been feds for years and years, but got convinced to come because of the incredible opportunities that existed to make progress on climate. And so that was this really great moment where we had the ability to do a lot of work because you got the institutional knowledge of people like Paul that had been there a long time and knew how to operate in government contexts, combined with new enthusiasm and expertise of people from the outside. So we were able to do a lot in the last few years, but unfortunately now with the new situation, a lot of those people that were game changers in the last 2 years in government have now since left because of the outlook here. And so I think there is a lot we can do from the outside, which we'll get to, but it is an unfortunate situation for all the potential that there was at the federal level.
Thanks. I do want to go back to you, Paul, and kind of picking up that thread where you're saying you are back. But you got this notice, and it's not like a snap of the fingers. You can go back and resume activities as if nothing had changed. First of all, you hadn't even been doing as much when you left, but you mentioned some of the hiccups of some people have gotten new jobs. So can you talk a little bit more? I mean, you'd mentioned to me a situation that happened with your badge, maybe telling that and just, what it's been like to actually try and get the work done even though you're back.
Yeah, and I can talk about that from the CDC perspective, but it also applies to my colleagues at EPA, at National Weather Service. They're all going through something similar. But as you can imagine, when you fire 2,400 people and then try to bring a few hundred of them back, like you said, it's not a snap of the finger. So people had turned in laptops and badges and all of that. And as I mentioned, human resources was greatly reduced as well. So we had circumstances where, like, for example, when I went in the first time when I was supposed to come back, my badge didn't work. I couldn't get on campus. And, I don't blame HR. They didn't have the capacity to do that. But it's just been a really difficult transition to get things back up and running. And that's why I say we're not really doing the work yet. We're trying our best, but with those restrictions and with just the logistical hiccups that come along with everything that's going on, and then kind of the specter looming over us that you could just be fired again, it's been kind of difficult to make that transition back. But I think we do it because we're passionate. I mean, I've worked on the health impacts of climate change for 16 years. I work with an incredible team of epidemiologists. We have an economist. We have evaluators. These are people who are there. They didn't go into government work for a paycheck. They went in because they wanted to help people. So that's why we're back, and that's why we're trying to do the best that we can do right now.
So earlier, Gretchen, you had mentioned some of the lawsuits, and you had also mentioned some of the lawsuits because they have impacted some of the federal employees and whether they actually can be laid off or not. And I wanted to really touch on this and sit with it a little bit because as the Trump administration has been making all of these moves, we've seen state attorney generals, we've seen universities, we've seen NGOs like the Union of Concerned Scientists sue and to legally challenge these steps. And so can you talk a little bit about that as a strategy, how effective it's been, and kind of how that's playing out?
We're seeing the courts as being one of the few effective backstops on what this administration is doing. Because of the scale and the severity of what's happening so quickly, it's been hard to use some of the other tools in the toolbox that we would normally use to advocate and to try to challenge what's happening. So we've been seeing the lawsuits be more effective. We, the Union of Concerned Scientists, has sued DOJ and some of the efforts at the dismantling of agencies, and we've also sued over some of the removal of data and web pages on climate and environmental justice that has been happening across the government as well. One complicating factor, of course, is the most recent, or one of the more recent, Supreme Court decisions that did say the administration can move forward with a lot of the mass firings. And that has been one thing that the lawsuits have up until now been able to keep at bay. But you heard Paul say, I guess they're already getting busy on that overnight, firing many more people. So we'll see how effective that strategy is moving forward in that new context. But I think it's an important avenue to try to push back. And that recent decision did say you could challenge individual examples of firings and cases. So hopefully that can continue to be an effective strategy to try to slow some of the actions that we know are illegal and unlawful.
So we did get a question from the audience that I do want to make sure that we have a chance to ask Paul, which is, Paul, why was your team hired back? Do you know? And what is the goal for your team now?
Yeah, I wish I knew. We have no clue. The email didn't come from CDC. As I said, it was only about 400 people that were brought back, which included the climate program, at least what was left of us, the people who hadn't found new jobs yet. The asthma program, lead poisoning prevention, like a few other really critical health things were brought back. Again, what exactly does brought back mean? Where we only have funding till October 1st and we have all of those constraints. But we don't know, and that's part of what kind of adds to a really bad office environment, as you can imagine, because, you know, a lot of our colleagues just got fired yesterday. At CDC, there's still another Supreme Court case. It's hard to keep track of all of them. But for CDC, there is a case brought forth by about a dozen state attorneys general that is preventing the firing from going forward right now at CDC. So most CDC staff that have been fired are still on admin leave if they weren't brought back. But yeah, we don't have any answers. We don't know. There doesn't seem to be a rhyme or reason to it. There was even the Secretary of Health and Human Services had said environmental health is critical. Like, we need to focus on that. We're talking about toxins in the environment. And then all of the people that worked on environmental health were fired. So it really doesn't make sense. And it makes it really tough to keep doing it. You know, I've had people come into my office crying. You know, it's just, how do you deal with that and try to focus as much as you can on helping communities?
So one of the things I wanted to ask, and actually we have another audience question on this same topic, is what can people do about this? So, you know, we have just seen members of Congress say pass the reconciliation bill and the big beautiful bill, and it's kind of clawing things back, and maybe you might think, oh, I should call my member of Congress, and is that actually doing anything? So can you both kind of give some tangible examples of what you think could be helpful in this moment, whether it's specifically helping federal workers or preserving data or just continuing work in this space? And let's start with you, Gretchen.
There is a lot we can do. First, do not give up. Do not be resigned to the situation. One important thing is to tell the story of the impacts of what's happening. That's, of course, what Zara and many at Bloomberg are doing now. But I think one challenge that we're having is that this looks like esoteric or DC-centered policy wonkery that does not always convey what the real impacts of a lot of these moves are on people, on communities across the country. So the more we can tell those stories, really translate what some of these actions at the federal level mean for real people, the better off we are. So we're doing a lot of that work, and it would be great if we could all work together on that part. And the other really critical element is to work with Congress, to insist that your members of Congress take action on this. There are co-equal branches of government that can be doing more in this moment, and they need to see what can happen now, and we need to push back everywhere we can, in the courts, in the halls of Congress, and in the public narrative.
Yeah, and I would just add, first, totally agree with that, is that we have a lot of the solutions. So for anyone who was here yesterday, we talked about how we have the solutions for greenhouse gas emissions. How do we reduce those? Changing the energy systems. We have that for adaptation on health. I mean, we've been working on this for 16 years. So we have resources, data, frameworks. We know how to work with health departments to do this. So that being lost for a while, kind of back, kind of not back, and then could be lost again, I think that's something that there should be a focus on, that the tools are there. It's just the capacity to implement them at the federal government has really been cut dramatically, and we're not sure if it will continue.
Yeah. Well, I really appreciate you guys taking the time. Can we get a big round of applause for these guys? All right.
All right.
Please welcome to the stage Ryan Gellert, CEO of Patagonia, for a conversation with Bloomberg's Kim Basine.
Hi, I'm Kim. This is Ryan Gellert, the CEO of Patagonia, and we are so excited to have him here with us today. It's one of the most unique companies on the planet, and we're just psyched. Ryan, the first time we spoke in depth was back in November 2020?
2020, yeah.
Things were different back then.
That's my memory, yeah.
So I want to, we wrote a story, and I want to reference a passage from that, which I got from that interview, right? That weekend in November, your phone blew up with texts from friends and colleagues across North America and Europe as you watched President-elect Joe Biden's victory speech from your home in the Netherlands. You felt a wave of relief, then you sat down to compose a message to your employees. You told them to celebrate. Quote, "It was like taking a lot of bricks out of your backpack as you're trudging uphill." Those bricks are back now, aren't they?
Yeah, and they're bigger than ever.
So how are you feeling?
It's interesting. You know, I'm not sure I've read that piece in the 5 years since it came out, and I think I'm feeling, it's really interesting being up here on the heels of the last presentation. I think they set the tone for how I'm feeling. I think that polarization at that time that you're describing was a real problem, particularly here in America. I think it's exponentially worse now. I never imagined the attacks on science, the very facts of this country's been built on people having opinions and arguing vehemently around those opinions. But the one thing I think we generally agreed on were the facts, and the efforts to defund and to attack scientists and science is just something I never would have imagined. Then finally, what I'd say, I remember it was actually around that time I listened to Madeleine Albright do a conversation in the Netherlands, and it was done virtually because of COVID. And the first question the interviewer asked her was, America recently elected its first black president, and then there's Donald Trump. In this next election, he said, which is the real America? And Madeleine Albright, I think, was really taken back by that question. And after about 15 seconds of silence, she said, I think we'll see in this next election. I thought we did, and here we are.
So it's been 5 months-ish since Trump came back to the White House. Have you interacted with the administration at all in that time yet?
No, I would say not directly at all. In 5 months, we had a really good working relationship with the last administration. This one, that's not been the case so far. Probably not going to be the case.
Probably not?
Yeah. Seems unlikely.
Would you like to open a conversation with them?
I think we would. It's funny. I think there's often this perception that we are in some way like an extension of the Democratic Party, which nothing could be further from the truth. We've had battles with the Biden administration. We've had battles with the Obama administration. You can fill in the name as far back as you want to go with Democratic presidents. I think that what's really important to us is we will work with anybody that is deeply committed to protecting clean air, clean water, clean soil. I haven't seen a lot of indications that that's the case from any part of this administration, but I hope to be proven wrong. And perhaps public lands, there will be a little bit of an opportunity. We'll see.
And yeah, what are some of your priorities as you determine like where to press the administration on different things?
I think public lands is it, and probably it may prove to be the only area where there's some common ground. And my gut tells me it's not, because the administration is very progressive on protecting public lands. Certainly, there's a lot of voices in the Senate and in the House that have the opposite posture. But what I do believe works with this administration is public pressure. And through the reconciliation process, it was tremendous public pressure in support of protecting public lands. It was from across political ideologies. It was from across communities, outdoor-oriented people, hunters, fishers, otherwise, and it was around the country. So I think that was very successful for a minute in doing that and avoiding a sell-off of public lands as a way to raise money. The concerns that I have, that list is endlessly long around the forced lease sales in the Gulf of Mexico and up in Alaska, both on land and in the oceans.
So one thing that happened in that 5-year span was back in 2022, your founder, Yvon Chouinard, decided to change the ownership structure of Patagonia. Can you take us through what that structure is now?
Yeah, I give you a little bit of background, though, because I think it makes a lot of, it sort of impacts the story. So, Yvon has started Patagonia in 1973. He's always been the sole owner. He and the family have always been sole owners of the company. And he's looked a number of times at, okay, what do I do with this thing? I never set out to be a businessman. I don't really value money in particular. And I want to use these resources that I have, the business, any money that it kicks off and otherwise, to fight the climate and ecological crisis. What's the best way of doing that? And his mentor was a guy named Doug Tompkins. And Doug made money he started with his wife at the time, a company called Esprit, sold the company, moved down to South America, and became, with his second wife, Chris Tompkins, the first CEO of Patagonia. The two of them became the largest conservationists in the history of conservation by building national parks across Chile and Argentina. And so that was sort of the big idea that Yvon used as the straw man for, unless I got a better idea, I'll do something like that. So there were a number of points along the way where he thought about selling the company and doing that. But he always believed, unlike Esprit, that Patagonia as a functioning business, modeling a more responsible version of business, could have an outsized impact above and beyond just the money that he could give away. And so in 2021, in the depths of COVID, I remember, as you described, I was living in Europe and overseeing the Patagonia business in that part of the world. Finally made the move over in January. I think it was probably February, sitting on the back porch at Yvon's house with he and his wife, Melinda, and we were talking about a bunch of things. In essence, how the hell are we going to make payroll and how are we going to keep these things going? And he said, oh yeah, one other quick thing. I need you to figure out the future of the company. And
you got this. No problem.
I'm just going to pretend that conversation never happened and keep moving. And I came back a week later, and in classic Yvon form, he was like, yeah. But what about the future of the company? What's the ownership going to look like? And I said, Yvon, God, I got my hands more than full. Could you give me a minute on this? And he said, I swear if you don't get on this, I'm going to go down to the grocery store, buy one of those billionaires magazines, and start cold calling people. So you better get on it. So we went through this process that probably lasted, it was certainly a solid year, maybe closer to 18 months, just meeting with the family, a really small group, and just kind of understanding what are all the things that you want through any kind of new structure? What are all the things that you would not accept? Let's get them all on a board, and let's start really winnowing it down to like 2 or 3 things, because that's all we're going to be able to do. And when we did that, the 2 things that were most important to the entire family were cash flow the environment in much bigger ways right now, and ensure that Patagonia can continue to exist as a business in the world, run according to the values that we've imbued it with. And those 2 things, as I think you can imagine, are in conflict. And so we looked at selling the company, taking it public, doing all those things that you would expect, and none of them sort of balance that tension. And so what we put in place, to your question now, was a structure that's fairly novel, took parts kind of off the shelf within the system, and we have a perpetual purpose trust, which sits above the board of directors and makes sure that people like me don't screw this thing up and take it off the rails in a direction that the family is not comfortable with. That's one piece. The other piece is a series of 501c4s that we call the Holdfast Collective. And so at the end of each year, I look at how much money we've made as a business, what we need to reinvest in the business. Everything else goes to Holdfast, and they use that to cash flow environmental initiatives, projects, whether it be grassroots organizations or land acquisition.
They've Ryan-proofed it. You can't
They've Ryan-proofed it for now.
You're fine. But in what ways does this structure aid with Patagonia's priorities? Like, what does this allow you to do now that you weren't able to do before?
I think don't assume everybody in here is familiar with all the sort of streams of environmental philanthropy that we're involved in. But Yvonne, in the mid-'80s, I think it was 1985, decided that no matter what we did in running the business was always going to have a negative impact on the planet. And so in addition to trying to find better ways to make product and scale those solutions, one of the things he was really deeply committed to was paying an earth tax. So initially it was 10% of profits or 1% of revenue, whatever was greater. In 2002, he co-founded an independent organization called 1% for the Planet. And that's 1% of revenue, whether we're making money or not, we give to small grassroots organizations around the world working to combat the climate and ecological crisis. And so through that, we have a pool of about $14-15 million a year that we can put to work. With the restructure and the resources of Holdfast, it's all the excess profits. And so it allows us to make bigger moves more quickly than we were able to through 1%. We still pay 1% within the business. That's part of being a more responsible business. But now we have this second piece as well.
So one of your biggest battles, Patagonia's biggest battles with Trump 1.0 was, as you said, public lands. Mm-hmm. How have things evolved since then, and what are your strategies and tactics to protect public lands at this moment?
Well, I'd start with this, and it seems like such a basic concept, but I just think it's so unbelievably important as these issues are fought over generations. There's an old adage in conservation, which is conservationists have to win every day. Developers only have to win once. And so the conversation right now around public lands through this reconciliation process always starts in the same place. You could such a watch to how predictable the argument from that side is, which is, look how much we have. As if that's, size is relative. And what's really important is that we're holding the lines on protecting the public lands that are owned by all Americans and enjoyed by all Americans. And so on the one hand, I'm really encouraged about the engagement through this reconciliation process that I mentioned before. And on the other hand, I see how much extractive industry is moving deeper and deeper into pristine areas, including the Western Arctic of Alaska. And so the answer to your question is we're going to continue to fight like hell to protect every inch of that we can.
It's interesting the kind of allies you get in this particular spanning across the political aisle, like, Bass Pro Shops and things like that. Mm-hmm. These are also companies that support protecting public lands.
Absolutely. The hunting and fishing community has been incredibly active on this topic for a long time, but particularly in the last 45 days or so. I think they've been some of our biggest allies. We co-created with Conservation Alliance an organization of, it's now over 100 companies called Brands for Public Lands. And that's given sort of a platform for companies across the space to come together and pull in the same direction. So I get some hope from that. But again, the other part of this thing is just thinking about continuing to hold the lines on the protection in all the places. These cycles have a tendency to ebb and flow, and quietly and in the background is where some of the biggest damage happens.
And I hear that Patagonia and Holdfast have been actually buying up some land for large-scale conservation projects. Can you talk to us about that?
Yeah, I think it's important to acknowledge we actually don't own land, and so we put money behind acquisition, and then that land is given to different organizations, so we don't keep that land ourselves. We've been working on Project E.O. Wilson, Between the Rivers Project in Alabama, the Okefenokee Swamp in Georgia, Bristol Bay up in Alaska to prevent the Pebble Mine, the Vjosa River Wild National Park in Albania is a project that I've been very involved in for about a decade. Australia, we've got projects, Korea, Japan, around the world. But just looking at sensitive areas and unique opportunities where hopefully we can step in along with others and have an outsized impact.
I want to bring up something you said in the New York Times last year. You wrote a column called "The Climate Crisis is Bigger Than Any News Cycle." and talking about companies that are investing in sustainability, even if they're not saying it out loud anymore. And there's an interesting quote from you in here. Our business is not perfect either. Patagonia, which uses organic cotton and recycled materials across our products, supports factories that pays fair wages and encourages customers to buy fewer, better products, is part of the problem. We're trying to be a responsible company that sweats the details of every decision that we make, but every product we sell has a negative impact on the planet.
I gotta say, it sounds brilliant hearing it back from you.
No amount of water conservation and supply chain scrutinization will completely offset the damage that we're doing. Then why do it? Is there not a better way?
I don't think there is a better way. Well, let me come at it this way. We do the best we can. And I think that as we go, we learn. And the things that work well, we do more of them. And the things that don't work as well, we do less of them. I think organic cotton, the transition, which we made 30 years ago, is one of the best ideas we ever had. It's sobering to acknowledge that at the time we made the transition to organic cotton, less than 1% of the world's cotton was organically grown. Today, the notion of organic cotton is not as sort of quirky or misunderstood, and the reality, I believe, is still roughly 1% of cotton grown globally. So, I think it takes incredible commitment to try to change systems when there's so many vested interests in pushing from the other side. I think that, few things beat protecting wild places and putting them in the hands of the people that'll be great stewards for them. So that's one of the critical pieces. I think as far as our own footprint and what is absolutely critical to the way that we operate is we think about our footprint, we invest in ways to lower it, we scale those solutions and open source them to our competitors, and then we work on the, whether it's supporting grassroots activists or protecting land. I think some of the things that get me most excited right now within the business are decarbonizing our supply chain. Over 90% of our carbon footprint comes from the product that we make, not our facilities or moving it around the planet, but at the mill level, overwhelmingly. All of those mills are on the other side of the planet. None of those mills we own, and we're a small piece of the business for every one of them. And so we're pioneering with the mills, doing first it was engineering studies, now pilot programs, to work on carbon insetting and basically shifting them from coal to renewable energy where possible, and then using that to create a model that other companies can engage in. I think some of the other things are scaling product repair and also secondhand resale, selling products back to us selling those secondhand products to customers.
So you hit on something there I want to talk to you about. We had Jane Fonda in here last night, and she specifically called out Patagonia as a business that's leading the way, right? But there's various schools of thought here, like given the rest of corporate America, giving them like a template to do something. When you think about leadership, I've found that not many will follow, even if shown the way, right? Yep. How do you, as the CEO of Patagonia, view your role in all this?
I think our role, mine included, is to model consistently a more responsible form of business. I think that I'm going to be really cynical here, some of the least productive time I have invested is talking with leaders of other companies on different ways of doing things. Some of the most productive time I've invested is talking to employees of other companies and students in universities about different ways of doing things. So I think with leadership, often the cement's pretty dry. And I think with students and employees, it's very different. And so we'll continue to do what we do as well as we can do it, regardless of political cycles. And we will try to inspire customers, employees, and others that there are different options out there, however imperfect they may be.
Last thing, on the way out here, Patagonia still needs to sell shirts and jackets and make money.
Yeah.
In Trump's first term, sales grew every year until Patagonia surpassed $1 billion in revenue.
Mm-hmm.
Then the pandemic happened. How has your business been since then? And where are you
It has been a lot of hard work to grow very modestly since COVID. And part of that's by design. There's a number of decisions that we've made. One is opting out of any paid advertising on the Meta platforms, as an example, which is a really fertile ground to reach customers. So that's an example. Another is just making some different distribution choices. So some of it's intentional, some of it's just the landscape, but we're not a growth-oriented company, and you're absolutely right. We're unapologetically a for-profit business, and without a margin, there is no mission. So we try to do it both.
Ryan, thank you so much for joining us. It's wonderful.
Thanks, Scott.
Please welcome to the stage Simon Kim, CEO and founder of Gracious Hospitality Management, for a conversation with Bloomberg's Kate Crater.
We're so happy you're here this morning. I'm Kate Crater. I'm the food editor at Bloomberg. And this morning, I'm so excited because I get to talk to one of my heroes, Simon Kim, who operates two of the most successful restaurants in New York. You've probably heard of them, Cote and Cocodoc. If you haven't, good luck getting in. They have a 1,000+ person waiting list every single night. And he also has a Cote in Miami, which is equally popular and has people like Lionel Messi, who probably can get in. But what's kind of amazing, one thing that's amazing about Simon is that running, it's not, if you have a really popular restaurant, you don't need to, the environment and an eco mindset is not really what you would have in mind. And yet, Simon, let's talk about Cocodoc. Let's talk about your fried chicken place.
Sure. So Cocodoc is Cathedral of Fried Chicken, and the mission was to create better fried chicken. And so when I looked at fried chicken that everybody loves, how can we improve something that everybody loves? And we looked at chicken, and we found this Amish farm in Pennsylvania that practices regenerative agriculture, certified humane, pasture-raised bird. So we procure better chicken, and what's next is batter. So we found rice flour and starch that's naturally gluten-free. And what do you fry those now chicken and batter is oil. And we found this oil, which is quite interesting. It's called cultured oil. They procure a certified non-deforestation, certified non-GMO sugarcane from Brazil, and they extract and then they ferment it. In that process, you're able to get oil. And compared to average seed oil, it's about 10% of the environmental footprint, and it doesn't have the controversial negative health benefits of average seed oil. So we created basically better fried chicken, better batter, and better oil.
What's really cool about that also, though, is besides doing it, you also put it front and center on your menu, and not, that's not necessarily a recipe for a hot restaurant to do that, to put your eco credentials like front and center, and yet you do. Do you see that as being a benefit? Is your audience, do people respond to it?
I think so. Honestly, so we created this really beautiful, we have an amazing branding agency called Pentagram. They're kind of the top of the design world, and we created this beautiful triangle, 3 circles, explaining all the chicken, the oil, the batter. We created this beautiful thing on the back of the menu, like very large in front and center, almost like a back of cereal box. But honestly, no one really looks at it. I think what they're really more lured by is a beautiful design, and we have the largest champagne list in America, and we have those viral chicken nuggets topped with caviar. So I feel, and beautiful music, I have a DJs. I think people are more drawn to that,
That could be.
But just like cereal box, back of the cereal box, but I'm exposed to it, right? Whether it is the first day, whether it's your second day, whether that is your third day, or we create this beautiful relationship with our customers and loyalty. And when they end up in my website and they start seeing that the environment causes are actually part of this sexy restaurant, that's successful restaurant, I think you start to create a little more of an interest and initiation to learn more.
So we were saying, though, you're a business person when it comes down to it, and yet you see a formula for making environmental cooking or environmental food potentially a good business model. Like Ryan from Patagonia just did a good job, right? If anything's going to be inspiring, it's having a company like Patagonia, right?
Ryan's definitely one of my role models, right? To be able to create such a formidable business, but ultimately with a great mission. Yes, I think that's the goal, right? So I think there's a bell curve, right? That the extreme end of it is I'm willing to give up anything for the environment.
Right.
The other end is I'm willing to live on a styrofoam cup and plastic cup for convenience on a daily basis. I think so many of us live in the middle of the bell curve, right? We kind of gauge how much convenience and how much inconvenience we have to kind of make, daily decisions based on environmental and convenience and, vanity and as a consumer, right? You have to make that decision. And our goal is to kind of stay in the middle of the bell curve, leaning towards the environment places so that we create the perfect equilibrium of successful business, a sexy business that triggers vanity and consumerism, because I believe what percentage of companies are interested in environmental reasons, making better planet? What percentage of companies interested in making a successful P&L? 100% of them, right? So the goal is how can we actually hit that perfect equilibrium? And obviously we're nowhere near that, and that's why I'm here, to learn more about how we can achieve that through companies like Patagonia, through people like Kat. So that's why I'm here.
Do you, so does it make business sense for you as Khosla? Because often having, organic ingredients end up costing sometimes up to 50% more, right? Like everybody sees it when you go shopping, the organic products are always more expensive. And likewise, if you've got sustainable chicken from Green Label, like that probably is a little bit more expensive, and yet it works for your business model? It's been open for about a year and a half, and year and a half is not a short period of time, but I view restaurants almost as a dog. It's a good analogy. Dog looks like an adult dog in a year and a half, but until like 3 years, you're not a mature dog, if you will, mature restaurant. So we're still trying to figure it out. As of now, As of now, it's been very successful in terms of demand is really, really high. We're very fortunate at 5 o'clock on Mondays and Sundays. We're fully booked at the moment we open. So the business is there. Cost structure, we're still trying to figure out, but we're committed to this, right? This is, our mission is to create better fried chicken, and it doesn't happen overnight, right? So the cost is definitely a little higher than I anticipated, but the business volume compensates for it. So. And it's successful enough that you could conceivably roll out more Khosla? Absolutely. I think business success has been, humbly I say, it's a grand slam, right? We have about 150 seats, restaurant. We're going to do close to $20 million in first full fiscal year, which is a giant number for a fried chicken restaurant. You're doing okay. Yeah. You can buy dinner next time. Now, your other restaurant is the restaurant that you first became famous for is Cote, and that's a steakhouse. And the your environmental sustainability on that is taking a little bit more time. I know you've been interested in it. One thing, when I first met Simon, he asked me if I had information on sustainable beef producers, and I did some work on it, and it's hard. Like, that's not a product that if you are really environmentally minded, you're going to eat a lot of. And Simon took it really seriously, and it's taking a little longer. Can you talk about that? Absolutely. Steak is very difficult because steak, there's nothing to hide. Whereas fried chicken, you're hiding behind. You can have lean meat, but through the batter and fried chicken and the other components, you can overcompensate. Whereas steak, we as Americans are so used to that idea of beautifully well-marbled, dry-aged steak. And if you don't get that, and when do we eat steak? To kind of sort of celebrate certain function, not necessarily to, steak by nature is not something that you want to be frugal, you want to be refined with. It has something to do with a little more of abundance, if you will. So we went to many different grass-fed, like really leaning towards that other end of the bell curve where it's all about regenerative agriculture. And we fell in love with the beef, and we're like, we cannot wait to serve this beef at my restaurant. And at the end of the tour, I ate into it, I'm like, I'm going to go out of business. So I think we've run into a lot of challenges. But a positive note is that the industry also, there are plenty of ranchers who are committed into better
causes, right? So I was recently in North Dakota visiting Nyman Ranch Farm, and they were doing something really amazing. It was a no feedlot. The animal never leaves its birthplace until the final day, one bad day. And they were, just truly, not only is it regenerative agriculture, the animal welfare, the entire experience was extremely positive. So it takes a little bit of time for our palate as a consumer to get used to something that is not overly rich, right? So the taste needs to come down a little bit. The beef industry needs to also understand that just that environment causes is not enough, right? We need to be mindful what we can feed to the animals to create that marbling that doesn't necessarily compare to grain finished, but somewhere in between, right? Because again, I think this is all about the balance, right? People are willing to bend a little bit, but they're not willing to eat dry steak at a Michelin star restaurant, right? Yeah.
So do you, so you're opening in Las Vegas. It's the big opening in like a huge restaurant city. It is the restaurant that everybody is most excited about. Will you be sourcing beef also from Nyman Ranch there?
Absolutely. So currently we source from all over America in terms of USDA Prime. We have our partner farm in Nebraska that serves American Wagyu, which is a crossbred between Japanese Wagyu and American Black Angus. And we source some Japanese as well. So we're constantly looking, right? As we grow, we can make a little more bigger impact, and we can work with different farms. And as our purchasing power and our usage grows, we're able to kind of work a little more. What we want to purchase is what the distributor and ranchers want to provide. So we want to make sure that we're having those conversations. And that's why I visited this farm to ensure that we can continuously explore how the industry is developing so that when it's right, we can make that switch.
I do want to ask, because it's making such big news now, do you, with the flooding in Texas, and it's indicative of everything that's happening with the climate right now, all these climate emergencies. And yesterday I got to be on a panel with a woman called Ann McBride from the James Beard Foundation. She's keeping really careful tabs on what's happening all around, from the storms in North Carolina last year that impacted pecans, and it's just a bit crazy. Have you seen is there anything that's impacting you based on current events, or like the Texas floods? Is that impacting your beef supply at all?
As of now, we have not heard from our purveyors about the impact, but I think as a dad and as an American, as a person, I think what we're seeing is, and also as a restaurateur that ultimately serves what grows, this is extremely concerning, right? These crazy weather experiences that are highly impacted by climate causes, man-made causes, are definitely really scary. And we want to make sure, this is a constant reminder why we are here, right? What we can do better so that our children can have a better environment. So it's a heavy subject.
I do. I love the idea that I think as a parent, and they were talking about it just in the panel before, about the footprint that you have. And I think that's really interesting with Cocodoc, that it was easier for you to come up with like a sort of good climate strategy for that. Is that one reason? Is that a reason why you will expand Cocodoc, where you see expansion for Cocodoc coming?
Yes. So once again, this concept is about a year and a half, but we're fully committed, right? And we saw such a big improvement, this rate of improvement that we can make with Cocodoc, the fried chicken concept, versus goat. So I feel like where we are, we have made significant changes. Our chicken is entirely regenerative agriculture, as well as our oil. So I feel like we have a prototype that is significantly more advanced in favor of the environment. That's the prototype. So as an ambitious entrepreneur who wants to continuously grow the brand, there's a little bit of a conflict when it's with the first brand. Whereas the second brand, I feel very confident and lighthearted and more excited to continuously expand this brand, because win-win-win is the mutual win is what we're after. Yeah.
It's a lot of winning. Okay. I will say, though, I'm based in the UK, and one thing that's really popular there is dairy beef. So it's cows that are used to produce dairy and milk, and then they have a sort of second act as the steak on your plate or some kind of like cured beef. It's really, really cool. Is that something you would ever look at here? It's almost ubiquitous in the UK. I haven't seen it so much in the U.S. Is that anything you would look at?
Absolutely. And one of the positive things about the steakhouse that I own is we have a grill on the table. So every meat gets grilled on top of your table. So it's a combination of Korean barbecue and American steakhouse. So because of the unique setup, I can serve many different cuts of meat. You know, a conventional American steakhouse, you order ribeye, you get 12 ounces of ribeye, and that's what you have. Whereas for our business, its most famous dish is called Butcher's Feast. It's 4 different cuts of meat. So ultimately, you eat 2 ounces of each cut. So we can be a lot more experimental. So let's say the older cows are interesting, right? Because more flavorful, but because they're older, they get more intermuscular fat as well. So I think there's a lot of merit to it. And let's say some guest doesn't really like it. Well, guess what? Let's move on to the next cut, right? They're not committed to it. So I think that's also an interesting part. So any sort of this experimental avant-garde way of serving meat, we're always happy to explore.
And what about like something else that made news? I was fascinated by this. I think somewhere, I think at a university, they were developing a pill to feed to cows that makes them stop burping and cuts down on the methane, which, you know, there's other issues with cows, but that would actually be an improvement. It's certainly an environmental improvement. Is that anything that you're keeping track of?
Absolutely. I kind of lost pulse on that, but a few years back, what we discovered is that there's certain type of seaweed. When you incorporate the seaweed into their feed, it reduces their methane production up to 75%.
Really?
Yes. So there's so many different undiscovered way of ranching, right? So I think these are, again, I'm in New York City selling beef and fried chicken, so I'm not necessarily on the ground trying to understand how. But we're having these conversations again, and as the consumer become a little more educated, and as I become more educated, if we can kind of align, then I think there is a great future ahead.
And is that something like, would you put it on your menu, like seaweed-fed beef? I feel like I would be fascinated. Like, I would want to order that. I will order it.
And what's really cool is a restaurant environment is really cool because you may not necessarily have the time to view that on a supermarket aisle because you need to go and pick up your son from soccer practice. But when you're actually at a restaurant with your friends, maybe that you have another 5 minutes to understand what that is. Or better yet, you just had really amazing steak, it was really delicious, and your server tells you that it was actually fed seaweed and created 75% reduction in methane gas on passing. That's enough to be seated, right? And when you come home or when you're in your office at 11 o'clock, you're a little bored, you kind of look that up, and then you can really kind of get educated on that. So I think that platform, having that popular restaurant that everyone wants to get into, I think it's a big platform, and I take that honor very seriously. And if we can, contribute very small, again, I mean, part of the bell curve. I'm not, unfortunately, on this side yet. So if I can make those small positive impact, that would be a great pleasure.
So great. Simon, thank you so much.
Thank you.
Thank you, everyone.
Yeah.
All right, I hope that made everybody really hungry for lunch because it is time to eat. That wraps our morning programming. I just have a couple of instructions for everybody. For those of you who have registered to attend the Advancing Carbon Credit Integrity breakout presented by Amazon, please make your way down the hall to the Marina breakout room, and that will start shortly, so you can make your way there now. And then we also have our facilitated networking, which will be in the Cove breakout room. That starts at 1 p.m. So feel free to just grab lunch out here, and then you can make your way there at 1 p.m. And we also encourage you to stop and visit the Alaska and Hawaiian Airlines Lounge, which is down the hall. And you can also explore the Amazon Sustainability Exchange installations in the networking space as well. So lots to do in the next 2 hours. We will be back here at 2 o'clock with Samantha Holloway. So we'll see you then.